Hey guys, here's my Discord, and in the past month we made over 8% returns. So I put out a lot of trades, some of them being Chipotle, some of them being American Airlines covered calls, Nvidia. I've had a lot of trades actually on Nvidia, on Google, on Apple, on Tesla. Lots of Tesla, some SoFi, more Apple, and today I've actually had a lot more trades on Google, Amazon, Apple, Tesla, and all the same names that I'm trading all the time. So if you guys are interested in Discord, I post all my trades. I have live coaching 2 times a week, and I also do one-on-one coaching. So if you're interested, go ahead and click the first link in the description, and you can learn about the Black Friday special and the holiday discount that I have going on right now for 2024. All right, guys, so I want to show you in this video how I'm selling put options on SPY, even if you have a smaller account. I'm going to show you a cheat code on selling puts with smaller amounts of capital and raking in consistent cash flow. So here's my portfolio, by the way. We're about to hit $4 million. This has been a fantastic journey in 2024, and I'm about to make a lot more money, guys. I promise. Now, let's go into an example on SPY because I want to show you this cheat code that I think is really going to help out some of the smaller portfolios, but also this is a really good strategy for using even if you have a bigger portfolio. Now look, first of all, I do have a lot of shares of SPY. I've had SPY in my portfolio for some time. This is a very big diversified ETF. SPY is one of the best because the expense ratio is super low. And here's the top 10 holdings. They have Nvidia, Apple, Microsoft, Amazon, Meta, Alphabet, Broadcom, Berkshire Hathaway, and Tesla. The expense ratio is 0.09, meaning 9 cents for every $10,000 that you invest. So basically the expenses are non-existent. This is a very cheap ETF. Now look, I'm going to go to trade SPY options. The SPY strategy I'm going to show you right now is really good and easy for retirement. Now, it's also really good for building up a small portfolio. I would say that this is one of the best strategies, period, for running on SPY. So if you're going to be selling options on SPY, this would be the way to do it. What you want to do is you want to go to sell put, okay? Now, I'm not going to just be selling a put. I'm going to make another leg here. So I'll show you what that means. So first of all, I'm going to pick an expiration day. You guys already know that I like consistent monthly cash flow. I'm not against weekly cash flow either, but for this example, I want to go for monthly cash flow. Now look, if I were to sell a put option, let's go to 590 right here. Let's check this out. All right, so this is a 31 delta. If I were to sell this option right here, it's going to be expensive. It's going to be a whole lot of money. Now, that is a problem, right? Because not everyone has $58,000 laying around. Now, I know SPY, it's simple, it's easy, it's fantastic for retirement, but still, what if you want to trade it with less capital? Well, here's the thing, here's what you can do. Let me tell you how I would modify this, okay? Now, first of all, I do want to teach you a little bit about expiration, how it works, managing the strategy, and I also need you to understand how to actually profit on this strategy consistently, because that's the most important thing. When you learn a new strategy, you need to understand how to profit from it very consistently and properly close this option and manage it from open to close. It's very important because so many people enter into a position and they don't properly close the position. That's why I want to talk about this up front, because there's so many beginners, by the way, they make this issue by entering into a trade, entering into a position, and then not closing that trade on time, okay? Or not getting enough profits and just closing it out too soon. All right, so we're going to go to sell put. All right, like I said, December 13, when it comes to expiration, you can go for 30 days, but you can also go a little bit shorter term. I can show you actually a modified right now 14 days because that's going to be somewhere in that middle point, okay? Between that 1 week and that 4 week period. That's when time decay really kicks in. So if you're looking to sell options for income, and 2 weeks is also a very good expiration date. So I want to make money on the fear, guys, by the way. I want to make money on fear and capitalize on that from the market. So here's how it's going to work. I'm going to go down. I'm going to scroll down here. I'm going to go for, let's say I'm going to go for 590. Okay, the delta is going to be a little bit lower because the chances of SPY going down to 590 are going to be a little bit lower in this shorter amount of time. All right, so if I sell this right here, what I'm going to do is now I'm going to go to buy option. Okay, I went to go sell put option. Now I'm going to go to buy a put option. Look, I usually go for a $5 spread, but you can also go for a little bit wider of a spread. So in this example right now, I'm going to go ahead and buy the 580. Now look, this is very important because if the market pulls back, a position like this can get hurt. So you need to understand how to manage it properly. Because I want you to make money on the fear. I want you to capitalize on market volatility. And on SPY, this is basically the only way to really squeeze out some big returns. Like right here, you can see it's $126. All right, that's how much I'm making. And the capital that I have to put out is $874. So right here, the return that I'm going to get is, roughly 1/8. Okay, so the percentage return is over 10%. I'm well over 10% in 14 days. So obviously, if I were to do this 2 times a month, it'd be over 20%. And this would be an extremely high return. So you have to understand, why is it so high? Well, the reason why is because this is a put credit spread. This is a put credit spread position, and you will benefit as long as SPY stays above 590. Okay, if it stays above 590, 591 or 595, or even if SPY goes up, you will be in the green. Okay, this is your green zone. All right, anything above 600, you're in the green. Anything under 600, you're still in the green, right up until this point, your break-even point of 588.74. Now look, selling puts is a very basic strategy. Where you sell puts and collect money, right? That's pretty easy. But the worst thing is when the stock ends up falling down. On a put, you get a sign. Well, on a put credit spread, it's pretty difficult, because the way to manage this is if it goes down, you need to actually close or roll, okay? You can't really get assigned on a put credit spread. You don't want to get assigned because you don't really have the capital. You don't want to put out the capital to buy 100 shares. So this is a smaller account strategy where we're going to use a very small amount of money, only about $800 to make $100 or $126. Now that's not so bad, and the worst case scenario here is basically if SPY ends up going lower. If it ends up going to 590, this is when I would start to think about actually closing out this trade. Now look, if I just wanted really safe and passive income, I would not actually pick the 590. I would actually go lower, because look, the lower that you go, your premium will go down. So if I go to 580 right here and I open this up, your delta here is much lower, okay? It's 0.12, and the volume here is also pretty good, all right? But this is going to be much safer because it's out of the money. So if I sell the 580 and then I go ahead and buy the 570, the return here is lower, okay? It's going to be, about 5%, a little bit over 5% or so, okay? But this 5% is going to be coming in about 2 weeks. So it's still a 10% return per month. Now this trade is a lot safer because the delta is only 0.12. So with the 0.12 delta, that means there's a 12% chance of you actually having to close out this option. Or actually, this 12% chance is actually SPY hitting 580. Okay, there's a 12% chance. That doesn't mean that it's going to be below 580. It's just the chances of SPY going down to 580. Now, what I would do in this scenario is most likely SPY will not go down to 580, because that is significantly lower, right? That's $18 lower than the current price of where SPY is at right now. So this is a fairly safe put credit spread, and SPY is an expensive ETF. So this gives you the potential to get into SPY for a much lower price, and you can trade shorter term options and really have fun with it, but also at the same time as having fun, be profitable, okay? Profit is the most important thing. So if you can get in and get out within 14 days for a 5% profit, I mean, look, if you add that up, that's going to be a really huge return per year. Now, of course, it's going to be very difficult because you have to manage this perfectly if you want to be right, every single 2-week period. Some 2-week periods, you're going to have to manage this in a proper way, because if you mismanage it, right, let's talk about the flip side of things. If you mismanage it and it goes all the way down, so in this example, if SPY goes down from, to 570, you will end up losing the entire collateral here, the entire capital that you put up of $950. And that's not something that you want to do. You always want to manage this position in a way that if it hits your strike price, that you think about closing the position or at least rolling down, okay? You can roll down and completely adjust this position and essentially manage it in a way that you do not, have any of that risk, right? For the most part, you can't control where SPY is going, but you can control when you get out of the position, when you close this position. Because for me, I would never want to lose the full amount. Because look, if you make $50, that's cool, right? You make it 10 times in a row, but then you have one losing trade and it wipes out all of your winners. That's no good. So what I would do is if this SPY ETF were to go down to 580, I would basically, in 90% of cases, I would immediately close. In the other 10% of cases, I would most likely roll this lower. Now, I'll talk about rolling in just a minute, but I also wanted to cover one more important thing. The position sizing that you want to have is really crucial for your risk management, because if you don't properly manage your risk, that's essentially not going to be good overall portfolio management in general, right? When you're managing a portfolio of money, your goal is to grow that portfolio, but it's actually to grow that portfolio at a reasonable risk level, right? Anyone can grow their portfolio fast. I have so many people that contact me and say, I made all this money in a short amount of time, but then as soon as the market pulls back, they end up losing all that money. That's because they don't understand proper risk management. They don't understand how to manage their position from beginning to entry, to closing that position, to rolling that position. All of these factors are extremely important. Now, I wouldn't really worry about making the maximum amount of money. I would first worry about getting to profitability on a consistent basis. Consistent is 6 months in a row. Every month for 6 months, you're over 10% a month on spreads. That's consistency. That's what I mean by having a consistent passive income. Not, 1 month is 15% up and then the next month you're down, or oh my goodness, I've seen this happen sometimes where big portfolios can blow up their entire big portfolio with credit spread. You need to be really careful. Now look, when it comes to rolling, what I typically do is I will typically close out a spread and I'll open up a new spread. So let's say that SPY goes down to 580. I will immediately close the position and I will go from 580 on the sell put and the 570 buy put. I'll close both legs and I'll go down an immediate $10. I'll go lower because when I go lower, that again gives me that safety and I can protect this $950, especially if some time has gone by. Look, if SPY goes down slowly and we approach expiration, you may actually still have a gain on the position. If it goes down to 581, it's a little bit out of the money, I may say to myself, hey, I'm actually still up on this position. Let me once again create safety, okay? It's kind of like a balancing act. When I'm trading options, I am looking at the market and deciding for myself, when will I roll? When will I close this position for safety? Because safety and risk management is the most important thing. It's like flying in an airplane. You want to be very safe. You want to make sure you get to your destination. And if you have to be 30 minutes late, but you're going to be safer, that's the way to go, okay? Same thing with driving a car. I'd rather be, slow and get to my end destination, even if I'm a little bit late, than, putting myself in harm's way. The same thing should be applied for your finance. You want to use credit spreads to increase the value of your portfolio quickly, but do so in a smart way. And SPY is one of the best, because what I'm trying to do is I'm trying to make your journey to becoming wealthy and basically growing to a 6-figure portfolio and a 7-figure portfolio as efficient as possible with the least amount of pain, because I've gone through the pain. So now I'm here to share my journey and my knowledge with you on YouTube so you can do the same. So you can also grow, but hopefully with less pain than I've had growing. And look, the options on SPY, they're just an absolute dream. Like, check this out. If I go to the expiration days, look how many expiration days are. There's 0 days, 1 day, 2 day, 3 day, 4 day, 7 day, 8, 9, 10, 11. The expirations here are an absolute dream. The liquidity on SPY is also a dream. So when you're looking at expiration days, they're actually not super important. You can go for 1 week, 2 weeks, or 1 month. All 3 of those options that I just gave you can be extremely lucrative and profitable as long as you're selling out of the money options. The options on SPY are absolutely a dream, and there's so many good factors about them, like the choices, but also the volume itself. So look, if I show you the volume, it's 112, okay? This is not even that typical of an expiration. This is like a weird expiration day, and still there's a lot of volume, okay? There's 112 volume here. Now, if I were to go to, let's say, sell put, I'm gonna go to a different expiration day. I don't know, let's go to December 20th here. You will notice that all these options here, if I expand them, there's a lot of volume, 351 volume. Here there's 747 volume. So the volume is really good, because what that means is it is liquid. And in the beginning of the video, I've already said that, liquidity is super important. If you want to be consistent, you need liquidity with the option. Like, for example, imagine trying to sell a luxury car versus a standard car. It's much easier to sell a Toyota fast versus a Ferrari. There's a lot of people in the market, and the price isn't so much, right, for a Toyota. But when it comes to like a Ferrari, it's much harder to sell because it's more luxury and niche. Well, SPY is like Toyota. Everyone is trading it. Everyone is in SPY. So by jumping into SPY, you have a lot of volume, you have a lot of liquidity, and there's always a buyer and there's always a seller. And the bid ask, okay, that's really, really important, okay? Check out this bid ask. This is top tier bid ask. This is the top tier bid ask you can possibly ask for. The bid is $6.83 and the ask is $6.86, okay? Right now, it's trading for a 2-cent bid ask. That is a super strong bid ask. So this is really important, because when you're looking to basically trade, you want to analyze the option chain, okay? Something that I always look for is I'm always looking through the option chain, and I'm looking for the bid ask spread to be tight. I'm looking for there to be solid volume. Like, wow, this right here has over 2,000 options traded just in one day, okay? And that's really important. Now, the other thing I'm looking at is delta, all right? So delta gives me a really good sense of my profit zone. So the lower delta is, look, the better, because it's inversely correlated with your chance of profit, okay? Meaning a 20 delta means there's an 80 chance of profit. A 10 delta means there's a 90 chance of profit. A 5 delta would be a 95 chance of profit. So you really want to analyze the options on multiple levels and really take a look at the option chain for liquidity, for volume, for bid-ask spread, and you want to trade the put credit spread in a smart way. Because for me, I have the sweet spot down when it comes to selling puts, covered calls, and my wheel strategy. My wheel strategy I've been doing for almost a decade now, right? I've been using the wheel for a decade, but I'll be honest with you, spreads is something that I have been using, but with a lot more volatility. I just, I don't even want to say it's myself, just in general, spread, they have more volatility. So there's a lot more opportunity, but you want to be careful and you want to do it in the smartest way possible by managing your risk, getting into the position properly, managing that position from all the way from A to Z until the end. And then look, I don't worry about early assignment, but as soon as it hits the strike price, at any time, I am thinking about rolling because I'm looking to preserve as much capital as possible. Even though myself, I'm only using spreads about 5% of my portfolio, I'm still always trying to, smartly manage that position, because the worst thing that can happen is if you end up losing money on a spread, it's not good, because making back that money can be very difficult. And I'm all for the slow and steady approach to building wealth passively and just really scaling up from 5 to 6 figures in a reasonable amount of time. And then once you're at 6 figures, that's when net worth really explodes. I'd love to help you. If you want some help scaling your portfolio, feel free to hit that first link in the description. I showed you Discord in the beginning of the video. And also, if you want to roll your options profitably, consistently, and fix any losing position, make sure to check out this video right here on rolling options.